As of mid-November 2024, gold and silver have shown volatility affected by US dollar strength and economic uncertainties, yet are expected to remain in demand due to inflation and market instability. Gold, benefiting from safe haven demand, has seen predictions it could rise sharply if economic pressures deepen. Silver's value is further bolstered by high industrial demand, notably in the solar energy sector, which is driving a supply deficit. Platinum, which is less prominently featured, is anticipated to follow industrial trends, with resilience expected due to its diverse industrial applications. Meanwhile, Bitcoin continues to draw attention as an alternative store of value, experiencing upward pressure from global liquidity trends and ongoing market uncertainties. Investors view Bitcoin as a hedge amid monetary expansion, echoing the role traditionally held by precious metals. G'day folks, welcome back to another update. Today we're looking at gold, silver, platinum and Bitcoin. Before we go any further, make sure you hit that like and subscribe button to support the channel. And here we've got the trend charts for monthly, weekly and daily for gold. As you can see on the gold monthly, it's still above its moving averages, but it looks like it's about to enter that moving average range, which will be slightly weakening or at least putting it in neutral positioning. The price has risen quite sharply, and this month it's actually dropped off so far. On the weekly, now we did have here a bearish, and we still have a bearish divergence, and that's still in play. You'll notice we drew a target here, the 23-38% minimum target. I'll say minimum because it always, more than 90% of the time, it hits this range, and this is actually still falling. The CCI is still dropping off, showing no sign of a pullback yet, and it's hit that minimum target on the weekly. If we go to the daily, we had a separate divergence. Again, all these divergences on the different time frames are independent; they're not necessarily related. And this is another bearish divergence for the CCI dropping off, lower highs on the CCI versus higher highs on the price. It actually fell through our moving average range of the price and hit the 23-38% target. It's actually fallen right through that, through this minor support at 26.05, and currently resting around the 50% retracement level. Now, if it drops below that 60%, and that we may well see it fall a lot further on the daily. Now, if we go to the intraday chart, so if you're trading on the intraday, always trade in the direction of the daily. So you would have been wise to take short trades during this period from around the 31st of August based on the daily, and you would have taken these short trades. So you can see there when the CCI drops below the moving average of the CCI and also the price below the moving averages, you would have taken a short position there, and you would close out the position when it enters in that CCI moving average range. So you would have closed it out near that near the bottom there on that little one. Let me zoom in a bit on this one to make it a bit clearer. So then a few other little short trades to be taken. Some of these might have been break evens or small stop losses. Another nice entry there when it drops below the moving average range of both the CCI and the price, and you close it out when it enters the CCI down the bottom there. Again, I prefer to take the close when it enters the CCI moving average range as opposed to the price chart, because even though the price seems to drop a lot further, now in this case that would have been a nice trade, but the CCI gives you an earlier exit and a safer exit near the bottom. Now notice here as well, had you stayed in that trade, the CCI started rising, going into bullish mode. You don't take long trades because again we only take the direction of the larger time frame. The daily is showing short only, so you would have waited on during that point and entered again when the price fell below the moving average range of the CCI there and also there. Now in this case the CCI went sideways, consolidated. You could have held on to it because unless you put a stop loss due to one of these previous highs, and then it fell down again and you would have got out of it at the bottom on that one there. Now the price fell further even though the CCI moved higher. In this case we start to see a bullish divergence. So on the hourly we've got higher lows on the CCI. For the same period we've got lower lows on the price. So again, we don't go long during this period because we just use that as an early warning if you're going short in this case, just to be careful, because I'd avoid going short dramatically, because even though you could have taken some of these trades, it's telling you here to be careful because the CCI is moving in the opposite direction. This is the silver chart. So we look at the trends first on the monthly, weekly and daily. On the monthly, still bullish, although notice the CCI is pulling back as showing by that bearish candle so far this month, but still predominantly bullish. On the weekly, however, we've got this bearish divergence, lower highs on the CCI versus higher highs on the price. This dropped and hit our minimum target range between that Fibonacci range, if I was to draw it there. And on the daily, You can see there we had another small bearish divergence there, lower highs, higher highs, dropped, hit our target, then bounced. And since then, the price has been moving in line with the CCI, so there's no divergence, bullish or bearish. But at the moment, the daily is bearish, with the CCI still below its moving average range. Now, if we go to the intraday charts, again, taking only short trades in the direction of the daily. Similar to gold, you would have taken these short trades when it fell, but notice here we had a bullish divergence. In this case, it bounced, hit our minimum target range, that 23-38% level, and then bounced down again. And you would have been wise to take a short position at that point there, when it also broke below the moving average of the price chart. A couple of other short entries you would have taken there. That one, the CCI went sideways, but the price kept falling. Another little bullish divergence there. Price bounced, hit our minimum target, then it bounced down again. Now again, this is a minimum target range. We don't trade these, but we use it as a potential reversal in this case. In this case, it did reverse from that minimum range and it fell further to the downside. We always follow the CCI trend along with the price trend. So for platinum on the trend charts on the monthly, it's pretty much consolidating and still moving sideways. There's no CCI for it, but let's call that a neutral positioning. On the weekly, it's broken below its moving averages on both the price and the CCI, so that's a bearish outlook. And on the daily, it's hovering within this minor support resistance range between 945 and 1020. And it's currently sitting around that 945 support level. But notice on the daily, the CCI is below its moving averages, giving us a bearish momentum. Again, if we go to the intraday charts, we only take short trades, similar to gold and silver. And you would have taken these short entries when it breaks below the CCI and the price moving averages. Now again, similar to gold and silver, we've got a bullish divergence here versus lower lows on the price, and it's made a bounce. Now if I was to draw a Fibonacci on this one, I'll take it from that low. I usually take it back to the previous significant high before the divergence started, and that would be that point there. And you can see there it's already hit the minimum range between that 23 and 38% level. Now if I was to take it to the next level, you can see there it's currently just hovering just below that 23% level. So, but again, I always take it to the previous significant high before the divergence started. But in this case, we've got a bullish movement. Now, this could be a potential reversal with these divergence, or it could just mean it enters that range and then it bounces back down again. Don't go short again until we see the CCI and the price chart break below their moving averages. And finally, Bitcoin on the monthly, it has got a CCI. Notice we've got also a bearish divergence. It's actually got new highs hitting this key resistance at 93,450. But we do have a bearish divergence here. Now that hasn't completed yet. It still potentially could break through this resistance and rise further. As soon as we start seeing this pullback more strongly, then we're going to consider that still a bearish divergence. For this divergence to fail, let me just zoom in on that. For this divergence to fail, we need to see the CCI rise higher than that high there, significantly higher, and also the price by then would have broken through that resistance. So don't go short yet. Wait for this to break to the downside below this moving average if you're planning on shorting it on the weekly, at least if you're trading on the weekly. On the weekly chart, again, it's broken up, hit that resistance, and that we still have a bearish divergence. Now that's almost a double top on the CCI versus higher highs on the price, so that's also a bearish divergence. Remember, we always trade on based on the direction of the higher time frame. So if you're trading on the weekly, we trade in the direction of the monthly. If we're trading on the daily, we trade in the direction of the weekly, and so on. And lastly, we look at on the daily chart. That has been bullish for a number of days now, but notice it's pulling back. It's hit this resistance, and it's pulling. The CCI is pulling back towards its moving average range. Still bullish, but it may enter that range in the next day or two. So again, bullish on the daily. Looking at the intraday charts, again more closely, if I zoom out, notice here we've got a bearish divergence versus higher highs on the price, and I've drawn a target here between that Fibonacci, between that high and that low back there, and that's a 23-38% Fibonacci range. Now it's already technically touched it, but I'm expecting it to fall further. The CCI and the hourly is still dropping, still bearish, so I expect it to fall further and into this range at least. And again, if it falls much further, then we track it and watch how far it drops. And if it does fall, let me just draw the Fibonacci on this one for your benefit. So if we draw a Fibonacci back to that significant low. It's a 23. Actually, that would have been drawn. Sorry about that. That would have been drawn back to that level. Yep, 23.38% level. So if that falls much below that, then we take it to the next level, which will be the 50% level. And if it falls below the 61%, then we're possibly going to see a reversal and further downside, threatening this support level at 66,440. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.